Something unusual is happening to the silver market. The Bank of America just made a bold prediction that silver could rise between $135 to $309 per ounce by the end of 2026. To understand that how big is, silver right now is at $80 to $85 per ounce, and if that forecast proves correct, silver could potentially deliver one of the largest commodity rallies in the modern history. But the question is, why now? Why major banks suddenly turning bullish on silver? To understand silver, we need to zoom out and look at the bigger picture. The global economic system is going through a massive transformation. Over the past decade, we have seen rising geopolitical tensions, supply chain fragmentation, currency competition, and increasing global debt. Many economists believe that the world is entering a period of structural instability. Some even describes it as the early stage of a new global economic order. Periods like this historically creates a demand for hard assets, assets that cannot be printed, assets that hold value during uncertainty, and for thousands of years, two metals have played that role, gold and silver. The recent conflict involving Iran is one example of how geopolitical tension influences financial markets. When conflicts escalate in strategically important regions, investors begin to look for safe haven assets. And recent market data shows that tension in the Middle East has already pushed investors towards precious metals like gold and silver, boosting the demand for gold and silver. Silver also reacts often during geopolitical crises. If you want to start investing in silver today, make sure you check the link down below in the description or comments. In fact, analysts say that if conflicts escalate or the supply routes remain closed, silver can rally alongside gold as investors hedge against uncertainty. And this is where energy market comes into play. One of the biggest effects of war is energy price shocks. When conflicts threaten oil supply routes or product regions, oil prices tend to rise. And rising oil prices trigger inflation. This is exactly what happened after Russia-Ukraine war in 2022. Energy prices surged across Europe, electricity costs skyrocketed, transportation and food costs increased, and inflation reached the levels not seen in decades. The same mechanism could happen again. If tension around Iran escalates further and energy markets become unstable, global inflation could rise again. And when inflation rises, investors always turn towards precious metals. Silver is different from gold in one very important way. Gold is mainly a monetary asset, but silver is both a monetary metal and an industrial metal. Silver is used in solar panels, electric vehicles, electronics, batteries, medical technology, because silver has the highest electrical conductivity of any metal, and it's essential for modern technology. This means silver benefits from two major demand drivers at the same time: investment demand and industrial demand. Now, the supply problem. Another reason why analysts are bullish on silver: supply. The silver market has been experiencing structural shortage in recent years. Mining supply has not been keeping up with demand. One reason is that most silver is not mined directly. Instead, it's produced as a byproduct of mining for other metals, such as copper or zinc. This means supply cannot easily increase when prices rise. And when supply is limited, while demand increases, prices tend to move sharply higher. Another key metric investors watch is the gold-silver ratio. The ratio measures how many ounces of silver equal 1 ounce of gold. Historically, the ratio has averaged around 40 to 60, but in certain cycles, it compresses dramatically. During the 1980 precious metal boom, the ratio fell around 14. According to analysts of Bank of America, if the ratio moves back toward historical lows, silver prices could surge significantly. This is how they arrived to their projection that silver could reach $135 to $309 per ounce in 2026. Today's geopolitical landscape is becoming increasingly unstable. Conflicts in the Middle East, rises tension between global power, and shifting economic alliances are reshaping the world economy. Analysts note that silver prices increasingly react to geopolitical disorder and safe haven demand during periods of global uncertainty. This environment tends to support precious metals because when confidence in financial system declines, investors seek assets outside the traditional monetary systems. Assets like gold, silver, and sometimes in digital assets like Bitcoin. Some investors believe the global financial system itself is slowly evolving. Central banks around the world are increasing gold reserves. Countries are exploring alternatives to traditional financial infrastructure. Debt levels globally are reaching historical highs. In times like this, many investors begin reallocating towards real assets. Assets that are scarce, assets that have preserved value for centuries. Silver fits that description. Of course, silver is not a guaranteed investment, and do not take anything in this video as financial or investment advice. The metal can be extremely volatile. Price can move dramatically in short periods of time. Interest rates, currency, strength, and industrial demand all affect silver. Short-term corrections are common, but long-term investors focus on the structural trends shaping the market. Silver sits in the intersection of two powerful forces, technology and the monetary uncertainty. With rising geopolitical tensions, political inflation shocks, and structural supply constraints, the metal could become one of the most important commodities of the coming decade. Whether Bank of America bold forecast becomes reality remains to be seen. But one thing is clear, silver once again is attracting global attention. And if you want to start investing in silver today, make sure to check the link down below, like and subscribe here for more videos like this in the future.